Hello, everyone. Welcome back to my weekend market analysis. Good to have you here with me. So, we are heading into the last trading week of October, and that alone makes things interesting. This is usually when the market starts repositioning, traders book profits, big players adjust their books, and you start to see those unexpected moves as liquidity shifts. Right now, global market feels like a stretched rubber band. Everything looks calm until something snaps. The global economy is clearly at a turning point. Inflation is cooling down, but confidence hasn't fully returned. Like last week, we started to see the US dollar lose its dominance, and big players are quietly repositioning for what could be the next cycle. Now, with central banks divided on the path forward and traders switching between safety and yield faster than usual, that uncertainty, that push and pull is exactly what is shaping currency flows this week. So, in this video, I will be showing you how I think all that global tension is playing out on the GBP USD, USDJPY, and gold charts, and more importantly, how I'm planning to trade around it. So, let's start with the GBP USD. Now, last week, the pound stayed relatively weak. The week started somewhere around here, around the 1.34500, and following the mixed UK inflation report, which showed prices easing a bit, this of course made traders begin to think that the Bank of England might start cutting rates earlier than expected. So we saw lower lows, lower highs, as sellers were clearly in control of this market. And somewhere around this 1.3300 area, we begin to notice buy pressure resume from here. That is, price appear to have found some support as buyers try to fight back. But if you look at it from an holistic point, sellers still had the upper hand. And you know how it goes. When markets start pricing in rate cuts, that currency usually loses strength. So now on my 4 hours time frame after capturing the character of price action in the last 5 to 6 weeks, I have this beautiful descending trend line capturing the series of lower highs. And of course, we saw price break out of that descending trend line a couple of weeks ago, and look at what happened. Price came back to retest the trend line last week as buying pressure resumed from here. And theoretically speaking, whenever we see price break out of a key structure like this, we do expect that it will become a platform that will send price continue the uptrend momentum. Now, will that be the case going into next week? Well, time will tell, and of course, the structure will guide us. Now, to help me navigate next week's trading session, I do have my key level at the 1.3325 area, an area that, as you can see here, has a memory for buying power. Though we saw a little bit of consolidation here, but it also was that point that triggered that move that broke out the trend line. Now price is back into that key level, and you can see we've been noticing some consolidation here. And now that we are going into next week, there is no high impact event from the UK, and so the focus will be on the US side, where we've got the Fed interest rate decision and FOMC press conference on Wednesday, and we have the US gross domestic product annualized for quarter 3 on Thursday, and of course the core personal consumption expenditure on Friday. And if the Fed stays hawkish, meaning they keep talking tough on inflation, that could strengthen the dollar and could send the GBP USD below this 1.32500 area to inside selling opportunities. And of course, price will be below the descending trend line to confirm that sellers are back into the business. But if the data comes in soft and the Fed ain't had easing up, we might finally see the pound break out of this second trend line, or we find buy pressure above the key level to confirm an uptrend move. So between the zones, that is between the 1.3325 and 1.325, we could see some extended sideways trading activity. So we need to be very cautious as this area is peculiar with fake outs. So depending on how price reacts to these levels will determine where I will be going next week. So now let's talk about the USDJPY. Now, this one's been very interesting. We saw last week price kept pushing higher, even though there was a lot of uncertainty in the US. Remember, part of the US government was shut down, and we didn't even get some key data releases last week. So, why did the USD/JPY rise? Well, the yen stayed weak, right? Japan's yields are still super low because the Bank of Japan hasn't tightened policy much. Meanwhile, even with the US slowdown, Treasury bond yields stayed attractive. So traders kept buying the dollar and selling the yen. That interest rate gap drove the momentum we saw here. So this was where price started last week, somewhere here, and we did capture this all bullish move as price kept on finding higher highs and higher lows. Now price is sitting around the 153.100 area. At this same area had stopped price before. If we go to as far back as 2 to 3 weeks ago, we saw how sellers negated buying pressure, pushing price to the downside from that particular point. And right now, price is back at that same juncture. And the question now is, will this area become a selling niche that will push price down? Or are we going to see a situation where that zone will be broken to the upside to emphasize buyer strength? Now, coming up next week, we've got some heavy economic event from both sides. The Bank of Japan interest rate decision is coming in on Thursday, as you will see here. We have the Tokyo Consumer Price Index on Thursday as well. And like I said earlier, of course, the US Fed meeting and data lineup is also there. So if the Bank of Japan ain't at tightening or getting serious about inflation, that could give the yen some strength and pull the USD/JPY to the downside. And of course, my key level for next week is around the 152.5, as you will see here. And if price breaks down the key level, it will also have broken down this ascending trend line where continuous selling pressure below this important confluence will incite a move to the downside, and we may be looking at price coming back into our last week key level at the 150.00 area. But if the Bank of Japan stays cautious, basically saying we are still patient, and the Fed comes out strong, that 152.5 could be a platform that could send price for another rally, where the breakout of the 153 would be the confirmation I'm looking out for to maximize the uptrend scenario. So again, the line in the sand for next week for me is the 152.500 area, where depending on how price reacts to this area will determine what I will be doing. Above it, I will be leaning bullish. Below it, I will be leaning bearish. So Moving into the final asset, that is gold. Last week, gold pushed into the previous high. Remember, before the beginning of last week, we saw price hit an all-time record high at the 4,382, and at the beginning of last week, we saw price move up, testing that record high area before pulling back as traders started taking profit. And that's normal for me, actually. After a big rally like that, especially in uncharted territory, people will want to lock in gains, especially before this coming week that is laced with high impactful event. And of course, we saw this pullback stopped around this psychological area, that is the $4,000 zone. And that's where we saw buyers come back into this market. And after that, we saw gold went into sideways range for the rest of the week, waiting for directions. So on the chart now, what I'm seeing here is quite simple. So in the last 5 to 6 weeks, the market price had consistently found higher lows, and this gives me this beautiful ascending trend line that will be guiding my trading decisions next week. And you know how we use our ascending trend lines in this community. As long as price remains above them, we want to be looking out for patterns and structures that support buying ideas. And if you look closely into the structure, you'll begin to notice that price appear to have evolved into a reversal setup just right around that ascending trend line, which at the moment is looking more like a double bottom structure, where the neckline of the structure is around the 4,135 area, which will also be serving as my key level next week. Now, here's my read around this area. If price action breaks above this neckline, that is the 4,135, with good momentum, that tells me buyers are back in business and we could be heading back towards that record high at the $4,382 zone. But if we see price drop below the key level, the $4,000 area, that is this level here, to the downside, or we see something like a breakdown retest of this trend line, it means that correction is deepening and sellers are taking over the market again. And with the Fed interest rate decision, GDP and the PCE data this coming week, gold will likely use those events as well. So stronger data and a strong Fed signal will incite stronger US dollar, which will push the price of gold to the downside, breaking down the structure to incite selling ideas. Or if we see a weak data or a dovish tone from the Fed, it could signal weaker US dollar, and this could incite a rally where above the 4,135 will be the sweet spot for buying opportunities next week. So that's my plan going into the new week. For me, the GBPUSD stays framed between the 1.3325 and 1.325. I will be reacting based on how price behaves around those zones. And for the USDJPY is a Bank of Japan week, and the 152.5 and the 153.1 area will be the place I will be paying the most attention to. And finally, on gold, we still have some room for bullish potentials here, though it still looks like it is waiting for clarity considering this sideways activity we see here. So I will be watching how it plays around the 4,135 and the 4,000 level, because that's where I expect the next big move to start from. And of course, as always, I will be dropping my trade intentions in the comment section as the week unfolds once price gives me the signal. If this video helped to give you clarity or perspective into your decisions for the coming week, support the project by liking the video, and share it with someone who trades these pairs. I will keep you updated through the course of the week, and as always, trade smart, trade consciously.